Welcome back everyone to the Money Control live stream. You are watching Markets with Santo and CJ. Well, the wretched run of the market continues. The large caps and the mid caps are leading the drubbing that stocks are taking at home on the cues that were given to us from the US markets overnight. And if you look at the Nifty and Sensex at this point of time, they're down more than 2.5%, and it seems like they are set for fifth consecutive day of losses in the market. Fear is evident everywhere. I mean, if you go into small caps, large caps, mid caps, most of the sectors are now in the red. So fear is everywhere, and you can see that in the volatility gauge, the India VIX, which has spiked more than 9 to 10% today. So clearly a lot is happening in the market, but there is also some bit of hope out there for those who like to see the silver lining. If you look into the Nifty 50s options, and if you look at the option chain, it doesn't seem like a lot of the traders are willing to buy put options beyond the 15,700 strike price, Santo. And that suggests to me that probably at this point of time, market is very confident that the Nifty 50 will be able to hold the support of the last drawdown that we saw in March after the Russia-Ukraine war, and the index dipped below 15,700 to 15,650. Probably the traders are expecting that the index will again take support at that level, and maybe we can see another bounce back happening the way we saw in late March.
Well, CJ, one thing is that despite the kind of panic that we are seeing in the market, the steep fall in prices, there's still a denial that we are probably in a bear market, and most people are still pointing out to the fact that we have still managed to outperform US equity indices by a wide margin, and that's why okay, this is just a temporary thing. We just go out and buy some more, which is in fact happening right now. Most HNIs, according to dealers at broking houses, say that they are still in the mood to buy. I'm not sure if that would be the right strategy at this point in time.
And why is that?
And it's because the mood of the market has changed now, and as markets rise sharply, they are also prone to fall sharply, right? And it's like catching falling knives, I mean, to use a oft repeated phrase. You think they are cheap, but once the sentiment changes, probably the cheap stocks keep getting cheaper. So I don't think that buy on dip strategy is a good thing to continue with anymore. It has run its course. Rather, it's now a sell on rally kind of approach that most traders and investors should be using. And you don't have to take my word or CJ's word for it. In fact, Money Control had interviewed Samir Arora of Helios Capital, and this is what he had to say. He answered a broad range of questions, and notably the ones are the question that most people are asking right now is that when will the Indian market bottom out, and what is kind of the right approach in this market. Arora has all the answers for you.
Don't think of it like GFC. The 2008 was materially different. Right. We are not relating this to 2008. We are talking about a normal bear market, which is 20-30%. If the pace at which US is falling, so US market, I think we will all bottom out when US bottoms out, even if we have fallen or not fallen. Because in itself, we could have justified India separately. But US market is falling at quite a sharp pace. So I was only saying, and I'm still saying, that at least you cannot predict it, you can wait for it, but in the middle of it, you don't even have to sell it, but you can change a little bit, you can talk a little differently, you don't have to guide every poor individual that put 100% today, you can say take 3 months, change a little bit, or wait 3 months for the new money. Right. I'm talking from a retail point of view. 5-6 months, he has to continue the STP, but a little bit more money, he can wait, it's not going to change his life either way.
I totally agree there with what Mr. Arora said, that it is possible that you can slowly and steadily keep on buying at least those stocks where you are confident that the overall fundamentals are going to stay strong for the next 2 to 3 years. That said, talking about stocks, let's quickly dive into our list, right, Santo?
Yep, starting with NCC, the company reported its fourth quarter earnings yesterday. Now, the numbers were no great shakes, margin pressures are quite evident, but what some of the analysts tracking the company have said is that, the reduction in debt, that's quite significant. The company has managed to bring down net debt to about 620 crore. That is leading quite a few brokerages to turn bullish on the stock. CLSA is one of the brokerages which is bullish on NCC. It's said that the balance sheet is in a much better shape right now, and it's poised to benefit from the next round of capex. It's also set a target of 105 for the stock.
I think CLSA being a little too hopeful, Santo, here, because yes, given balance sheet has improved a lot, given the debt reduction that the company is trying to do, but it's way too late for it in this cycle to be reducing debt, right? Some of its peers have been doing that almost for the past 2 years, and it's only now that NCC has got on that bandwagon. You mentioned about margins. I think for me, margins will remain a big concern, right? Even if the company may get more orders and the order books look quite great, execution issues will continue because construction costs are rising everywhere, right? We have seen a lot of real estate players also talk about construction costs going through the roof, and that will continue to weigh on profitability. That said, another key trigger for the stock was supposed to be the sale of this land bank that the company had in Andhra Pradesh, right? The land bank was estimated to be have a market value of about 500 to 600 crores, and by the management guidance, it was supposed to come in FY22, but it has not. And that remains to be seen whether they will be able to get rid of that land bank in this year. There has been no comment so far from the management, but if the stock has to move, that will be the next trigger.
So that is the trigger for this year, among other things, I would say.
Santo, the sort of optimism that you are, displaying on NCC, you would assume that the stock is probably nearest 52-week high, right? But it's actually nearest 52-week low.
All the more reason you buy cheap.
Not. If you look at the technical charts, they are just screaming weakness at this point of time.
Say death cross.
There is no there is actually a death cross here, but I will not say it outright. But you can get my hint, right? The technical charts are indicating it's probably not the best time to get into the stock when it's on the verge of breaking its 52-week lows. That said, one stock which is actually showing signs of life again is Indiabulls Housing Finance. It was down and out in yesterday's trade, fell almost 19 to 20% on some fears around whether the company will be able to meet its debt obligations because of rising interest rates and higher cost of funding, etc., etc. But the company has come out with a disclosure saying that they are going to prepay. Actually, they are paying some of their dollar bonds a bit earlier than they are scheduled to, and these bonds amount to about $350 million, and that goes to show that the management took the hint from the market that where the concern was, and it very promptly acted on those concerns and showed the market that it remains in a strong position in terms of capital, it remains in a strong position in terms of paying back its debt, and therefore I think that should give the market a lot of confidence, and we have seen that in the stock performance, with the stock rising more than 5% in trade today. And overall, if you look at Indiabulls Housing Finance, it's a great story in terms of the turnaround it has seen since to 2019, when these concerns were actually there in terms of its balance sheet, and now it is a beneficiary of the housing demand cycle, right? We have seen what HDFC chairman Mr. Parekh had to say in terms of housing demand. The mortgage demand remains high, loan demand for housing remains high, and this company will definitely benefit somewhat from that, if not the most.
Well, CJ, you're taking the rise in stock price between yesterday and today to kind of build a very big case for Indiabulls Housing Finance.
The case was there. It's just that yesterday's price action had deterred
but just step back and over the last 1 year and see how the stock has been doing. In fact, when the picture looks even more grim, when you were to look at the stock graph from a 3-year point of view, right? It's fallen very, very sharply. Now, see, CJ, yes, your arguments are valid in a sense, like this is one of those high risk, high return kind of stocks. Almost all the negatives are out there. The stock is quoting at 1/3 its book value. Now, overall housing segment remains quite strong, as you said. Deepak Parekh also said that this is the best time for housing. Now, that said, is Indiabulls Housing Finance the stock you will try to play the upside in the boom in the housing finance segment? I don't really think so. Now, look at compounded growth in top line, bottom line, also return on equity. Each of the last 3 years, it's been steadily declining. Now, look at promoter holding. It came down in the March quarter. Look at FII holding, it came down in the March quarter. Look at the domestic institutional holding, that's come down. This is a stock where everyone is getting out of. So, while it may give some trading opportunities, no doubt.
Not everyone. I'll tell you why the earnings performance has not been good. Because the company had been going through a churn for the past 3 years, right? The IL&FS crisis found out the company's promoters or the way they were managing the asset liability, side of the business. And clearly there was a need for fresh approach to all of that. That is what Indiabulls Housing is trying to do. They're trying to do a more fresh approach wherein they do not take the burden of originating the loan on their balance sheet, but they get into partnership with a lot of the lenders out there, the banks out there, and co-generate a lot of these loans, right? Therefore, the balance sheet risk that they will probably face this time around from a new credit cycle will be much lower than what they had probably in the 2008 to 2015 period. That is part on the earnings side. And you talk about the promoter, see, Indiabulls promoter was probably one of the bigger risks that the market had, right? Whatever you want to say about it in the past, that's in the past. But the fact that Mr. Sameer Goloth actually took himself out of the management picture and has been reducing his stake, plus, the real estate company of Indiabulls Group got into partnership with a company like MSC. So all of those are suggesting to the market that this is going to be a more professionally managed ship going forward, and that has given a lot of confidence. Yes, before this market correction, Indiabulls actually was on a upward runway in terms of stock performance. The market, with this market, everything has fallen, right? Investors have not spared anyone, and I think that if you take a zoom out a little bit and take a longer term view, Indiabulls Housing should be in one of your portfolios.
Well, just one quick short point before you can take up the next stock on your portfolio. See, the whole thing, partnering with other banks, doing co-generation and all sounds grand. And you will say that the risk has come down. But if the risk has come down, it's never going to make the same kind of money it used to do so when it was, making its own loans.
But anyway, at least it will not, whittle away all of those money that it used to make.
Yeah, but then what is the price you would pay is the argument.
One stock that, again, probably you will raise your eyebrows on, but one stock that market is really finding very attractive right now is GMM Pfaudler. It was one of the biggest gainers in 2020 and the 2020 run in the market, but then came off because of the massive OFS discount and question marks over how the promoters were, acting and reacting, plus the acquisition of its foreign parent later that happened, where the market was a little unsure whether that was the right move to make. But it seems that all of that correction now being all of those concerns and with the reflecting in the price now after a very meaningful correction, opportunity is emerging. The stock was among the gainers in a very weak market today, and if you look at the longer term story for GMM, it's a proxy to the India becoming the next chemical hub, right? The China plus one theme that we have been listening to for the past 2 years. GMM is a clear beneficiary because it supplies materials and engineering services to a lot of the chemical and pharmaceutical companies out there. Plus, it has compounded its cash flow at more than 20% for the past 3 years, right? That is probably one of the reasons why Saurabh Mukherjee's Marcellus PMS also has GMM in its rising stars portfolio. And it's a near monopoly business. In the space that it is in, it's a near monopoly business. And you know that the market loves monopoly businesses, right? Those who are near, not all monopoly businesses, as Coal India would probably know, but it does tend to love businesses which has pricing power, and GMM has that.
Fair point, CJ. Just one thing here, this is also one phase of the market where the sins of the past come to bite you back. And I think this is that time when, market investors would be typically more comfortable with companies, managements that have not let them down in the past. Now look at the stock price of GMM Pfaudler. It had gone to a high of about 6,000 odd,
yeah,
right? Then, it priced its OFS at a very steep discount for reasons very unknown till now. Now, that also is an indication probably of what investors saw value in the stock. Those were all institutional investors, right? So, they had to price it at a steep discount.
But the OFS investors have made money, right?
They have made money, 3,500 and now it's 4,200 in
right.
2 years.
Right.
So the stock has not really performed in the last couple of years. While all those points about monopoly business and everything is right, which is why probably you're getting a very high discounting for the stock. It's about 85 times trailing earnings, and again on the earnings for last year and this year, trailing 12 months, there's not much change in the annual profit, but that's fine. Probably they're also investing heavily in.
They are. Of course, they ended up buying their parents, so that also led
all those
to
things
a lot
are there.
of
But
this
perception, right? That also plays a key role in this kind of an uncertain market, and that is where I think probably the near-term upside
but
in the stock.
Perceptions can change very quickly, Santo. Nobody knows that better than you in this market.
Well, Polycab, the next stock on our watch list. Q4 numbers better than expected, while the profit growth was not as much as analysts were expecting, but what most analysts liked was that the operating margin, the company was able to hold on to its operating margins, and those were better than some of its peer group. Also, Nomura has reiterated its buy call on the stock and has upped its price target to 3,300 rupees.
Santo, Polycab has been a great compounding story, right? Since the time its IPO came out, it has been a very good wealth generator for investors. It's also part of an industry which is overall looked quite optimistically from the investment point of view. But I feel that a lot of the positives when it comes to Polycab are already reflected in the price, and that is why, given the limited upside, it's a big no for me. I would probably go and invest in a GMM Pfaudler for the upside that it may offer to me than a Polycab right now. If you talk about, even if you look at the fundamental side of the business, while overall performance, earnings performance for the past few years have been quite good, right? But a lot of its revenues are exposed to what the government is doing, right? A lot of the government's infrastructure and social spending affect how Polycab revenues are going to do. And in a year where costs are rising even for the government in terms of fertilizer bill, in terms of the food subsidies, it is still a question mark whether government will be able to spend in the way that it has been able to do for the economy over the past 3-4 years. Let's be clear, elections are approaching in another 2 years. We have some state elections coming, so the government would want to reduce the pain of high inflation on the citizens as much as possible. So there is a question mark still there. That is a risk that I will want to watch out for. And lastly, if you look at it from a FY23 story, a capex story, some of the capex triggers that were there in terms of people expecting that probably lower interest rates, the affordability in housing, all of that will probably lead to a big revival in private capex. The uncertain business environment that all of the Russia-Ukraine war, the high RBI rate hikes, the Fed rate hikes created, I am not so sure that the capex is coming maybe this year. Maybe we will have to wait for FY24 or FY25 to see actual private capex in this market.
I'll catch you on this again, but maybe
Definitely.
some other time. Mahanagar Gas, the last stock on our watch list. Now, the stock has been under pressure as the fourth quarter numbers fell short of market expectations. Now, some analysts feel that the revised gas policy is a positive for the sector as a whole, but it's not yet clear at this point whether Mahanagar Gas too will benefit from it, because which also means that under the new policy, the pooling of gas, it benefits those companies which were having, which are getting a lower quota of administered price gas, whereas for some like Mahanagar and Indraprasth, those companies could perhaps stand to lose. There's some bit of uncertainty over it, which could explain why the stock rose early in the day, but then quickly came off its highs for the day.
I'm absolutely sure. I'm not going anywhere near Mahanagar Gas at this point, or I'm not for at least the next 9 months. It is one stock that I can happily skip.
Well,
I'm missing something, right?
Well, a quick look at the market before we get on to that. Still the selling pressure.
A little off lows, it seems. No, it's not true at this point of time. It seems Nifty is still down about 2.2% if you look at it, and the Sensex is also down about 2.1%. Sensex has broken below the 53,000 level, Santos, so that is a little concerning. If you look at some of the individual counters, we only have Wipro at this point of time, which is actually in the gaining, on the gaining side on the Sensex. Rest 29 counters are in the red. The losses are being led by a financial services name are basically leading the losses. If you look at IndusInd Bank, down about 6%, Bajaj Finserv, Bajaj Finance are down more than 3% each. HDFC Bank again down more than 3% each. So the financial space, which everybody, most institutional side of the market was very, very bullish about in January and February, it seems like there is not that bullishness is not translating into stock performance.
Well, maybe you're extrapolating it with today's performance.
It's just not today. If you look at a Nifty Bank's performance, it's not been that much to write home about, Santo.
Yeah. So right now there's also mayhem happening in the crypto space. Now CJ here has been a big votary of the crypto assets.
I still am.
Okay.
Not have.
And you're seeing a sharp drop in Bitcoin prices as well. It has fallen below the psychological $30,000 mark, which has in turn led to further selling pressure. Also, the so-called stable coins, which were supposed to be less volatile. Now you have the US token breaking the $1 peg, which has led to more panic. CJ, I also wanted to know your thoughts. This is something more than stocks. People of your generation have been more crazy about crypto assets. So, how are they seeing things
Crazy,
right now?
not crazy, smart, Santo. You've been
Okay.
smart about it. Come
Right.
on, if you look at any other asset class, if you look at the asset class across the past 5 to 6 years, which have made the most money, Bitcoin stands taller than anybody else, right? Even if you bring equities or US treasuries or even gold, more than anybody else, crypto has given compounded growth over the past 5 to 6 years. And that is the story that everybody has been chasing in the crypto space, because it's seen as the asset of the future, the digital gold, with the monetary policy loosening that we had across the globe, with the trust factor that was going down in central banks, cryptocurrencies were an obvious choice to go, because they were rare, because in terms of Bitcoin especially, you had the supply that is very limited to 21 million, and therefore it's a rare asset, so a hedge against inflation, right? But what we have also seen right now is that because of the easy money getting out of the system, a lot of the leverage based position where investors are borrowing money to invest in Bitcoin because of the huge rally that we saw in 2020 and 2021, a lot of those investors are the ones who have actually suffered, and because of the selling that you have seen from them is why the Bitcoin price has been in doldrums since last June of last year. Now the 30,000 level was very crucial, but this is the second time it seems that the Bitcoin has taken support around or near that level, and probably if you look at talking about technicals, a double bottom and these sort of scenarios generally tend to be quite positive, right? When the chart is making an W sort of a shape.
Two terms which CJ likes here a lot. One is death cross. When he's not speaking about death cross, he's always talking about double bottoms. Please
yeah,
go.
because there are always signs of trend reversal, right? And that is what is important when you're trying to make money in this market. That said, if you look at the the longer term picture, most of the selling in Bitcoin has largely been driven by investors who bought Bitcoin after January 2021. If you look at those who bought Bitcoin before that, it seems that a lot of those Bitcoiners have continued to hodl, what you call as holding, but with a twist. They've continued to hold their Bitcoins, have they not been very susceptible to selling it on every rise. They in fact believe in the longer term picture that Bitcoin is probably headed towards the $100,000 mark in another next one or 2 years. That is because every 3 to 4 years, the Bitcoin supply tends to halve. That is the incentive that is given to miners who supply the Bitcoin is halved every 3 to 4 years. And generally, whenever this event happens, the next event will probably happen in early 2024, Bitcoin's value tends to skyrocket. That is because if you have less of a supply and you have more of a demand, then of course prices will go up. So
but CJ, now there's something similar parallel between the crypto market and the stock market also,
Yeah.
People who had bought stocks at lower level, they sit tight for some time thinking, okay, now, I'm still on profit. But when slowly when the profit starts receding, they also join the selling spree, and that's how a bottom is made.
So Santo, for Bitcoin, for those sort of Bitcoin hodlers to actually join the selling spree, Bitcoin will probably have to take out its previous all-time high that was around the $18,000 level, $18,000 level, for them to actually consider selling. For as long as it holds the $27,000 to $30,000 mark, I do not think a lot of the longer term investors who have been holding on to Bitcoin for the past 3 to 4 years, they are not letting go of their coins.
Remember, there's no circuit filters here and nobody to intervene, when the prices are in a free fall.
Don't underestimate the diamond hands of crypto investors, Santo.
Don't
underestimate
So what else do we have on the horizon, CJ?
Well, it's the inflation data at home. Yesterday, we talked about the inflation data in US, and we told you that, if that data comes out to be above expectation, then the market will crack, and it did. Today, the CPI inflation for India for the April month will come out later in the evening. And yes, now market will determine its expectation of how much the RBI will hike interest rates in the June meeting, or maybe, who knows, even before the June meeting, because the way the RBI has been doing emergency meetings. So a lot of those expectations will be set by the CPI numbers. Plus, you also have a lot of earnings coming in. Tata Motors and L&T, two very important nifty companies, will be reporting their earnings later today after market closes. And tomorrow we have the big bank, SBI, State Bank of India, coming out with its Q4 numbers, along with Tech Mahindra also. So a lot of earnings will be in focus, and a lot of economic data also in focus for market.
Well, CJ, on that closing note, the stock that you flagged this morning, Nykaa, is up close to about 3%.
Yeah. My moment to raise my collar.
Oh yeah, but then Zomato has fallen even further. Don't forget that.
That is okay. That is okay. I think this is a good time for those, as Mr. Arora said, you slowly get into some of these names where market has totally forgotten about them, is not willing to give them any sort of valuation. Maybe this is the time where longer term picture still remains quite rosy.
Remember, a lot of investors have become long-term investors because of the steep correction.
Let's
in the
go
market.
home, Santo. Now, is there's only 5 minutes left, so let our viewers have the trading, go back to their trading, and we will catch them tomorrow at 9 a.m. live again.
Yeah,
right?
and please do share your feedback on the show.
And follow us on the social media links that you can see at the bottom of your screen. For the rest of your updates, do stay tuned to moneycontrol.com and the Money Control app. See you tomorrow.